All right, traders. So the pair that's up for today is the New Zealand dollar, Canadian dollar. I did a quick kind of glance through this one, and this is going to be a great example of where the testing will come in. So there's a couple of very easy filters that you could apply that would really swing the results on this specific pair. Now, the problem with filters is how much profit is it going to take away, right? So there's a fine line between whether you want to use a filter or not. Now, any filter has to be 100% objective. So as we're walking through here, I just want to kind of talk to you about some ideas that I have. All right, so let's get started here. We already know the two trade types that we're looking for. If not, go back through and watch some other videos. So here's the L24 inside of a sell zone. So I'd be looking for a move into the L24. We get a new one, so I would go ahead and have an order here at 93. My stop would be 13. So I would have been stopped out here, and I would have re-entered, so I would have had two stops on this specific one. Okay, there's no filter that would have kept me out of that trade. Okay. Here's another L24 inside of a buy zone. Now, what do you notice on this trade? I'm gonna just, if you have to, pause the video for a second and just take a look at the higher time frames. So on this specific trade, you can see that price actually came into the 10 period MA and failed. So do I really want to trade back into the 10 period MA? I don't know. I won't know until I do my testing. So there's two more losers. All right, now what do you note here? Because here I'd have another L24. It's within 2 pips. Look at the weekly, guys. Price came into a weekly buy zone and bounced big time. Do I want to short after that? I don't know. Maybe. My entry here would have been 88.11. My stop 31. I'd be back in at 31. And you can see it didn't quite make it to 100 pips for my target. So I'd have 2 more losses there. So you can see right now, I'm gonna keep a little tally on the side of ones we could avoid. So I have 4 losses could have been avoided, the last 2. And guys, here's another one that I need to test. I've talked about this in prior videos, but if I get a moving average inside of a sell zone, typically is a pretty good trade. Let's see if this one would have worked out. 73. Oh man, would have hit just about to the pip on your target. Ha! Alright, so maybe not. Okay, now this is not one that I would do, because by the time the L24 printed, price was above it. Okay, I could have a trade here if it comes back. Doesn't come back. Okay, here's a trade. Now, here again, guys, look at the weekly. I just hit the 200 period on the weekly. Do I want to trade into that? Probably not, right? There's 2 more losses, and 6 losses I could have avoided. Okay, what do we have here? See, 94. It's 5 pips away, so there's no trade there. Okay, have a trade here. Okay, now here on this one, I haven't rejected off of anything, right? I hit the 200 period, but that was way up here. So I'd be in here at 17. Stopped out there at 97, re-enter 97, and then target. So 1 loss, 1 win. Okay, this move right here, guys, I hit the 200 period on the weekly just before price came down. So again, here's one that I'd be questioning, right? So I'd be in at 75. And there's 2 losses. And again, 2 more that I could have avoided. Now here's another one of those moving averages inside of a sell zone. This one would have been 68. Okay, this would have been a trade that I would have had no reason to not take it. I'd be at 37, stop 57, re-enter at 57. See, 89, 57, and there's target. So 1 loss, 1 win in that one. Okay, I could have a trade here. Okay, it doesn't come back. Here's one where you have the weekly 10 period inside of this sell zone. See how it does. That's pretty good. Okay, I would take a trade here. Now let's look at this one, guys. Look, prior to this trade, you can see I'm inside of a weekly sell zone. There's my entry, 76. Stop twice. And again, 2 more that I could have avoided. Okay, here's another one. I'm inside of a weekly buy zone. 52, 72, 92. So 2 more losses and 2 more I could have avoided. Okay, there'll be nothing keep me from this one. So in at 97. Stopped out 77, back in at 77. And target. 1 win, 1 loss. Okay, let's look at this one. Nothing. I would not have avoided this one. So I'd be at 71 and two losses. Here's another one. I would definitely take this one. I'm in it. Let's go back here. I'm in it. 02. So 82. So stopped out there, back in at 82. 62 if you want to stop, and stopped. Okay, nothing would avoid. There's nothing that would keep me from taking this one. 51 down to 31, back in at 31, and stopped. Okay, I do have a zone inside the zone here, so I'd have a weekly zone inside of a daily zone. I'm sorry, an hourly zone inside of a weekly zone. So I'd be in here at 12. Make sure I got this right. 87.12, okay. There's the target. Okay, here'd be another one inside the weekly zone, so there's 2 losses. I think, right? 26 down to 06. Back in at 06. Wait. Yeah, 26 to 06, 06 to 86. So yeah, 2 losses. Okay, here's another one, L24 inside the sell zone. Now this is inside of a weekly buy zone, so I could avoid this one. 64 to 84, 84 to 03 there, okay. Okay, now this one would make a lot more sense than this one, right? So I'd be in here at 81, 87, 81, yep, and target hit. That's 3. This one's 3 pips away, but let's just say this was a valid trade. Would it make sense to take this after hitting the 200 on the weekly? No. Right? Here would be a trade. 08. So looking for 89.08. And there's your target. Here we go. Here's another one. 42 to 44. So I'd be in at 44. Looking for what, 88.44. Okay, so you can see by just adopting a couple very basic filters, I mean, guys, it's nothing. I don't want to trade into a weekly buy or sell zone. I don't want to trade into any of the moving averages on the high time frame. That's pretty simple, right? So let's just tally it up. So I've got 5, 10, 15, 20, 25, 27 losses and 6 wins. So let's take 27 times 20 pips. It's 540 pips. Our winners are 100, and we have 6 of them. So that gives us positive 60 pips, which frankly, based on just the beatdown this thing took, I find it amazing that it's positive. Now let's count up the number of trades that we could have avoided. 5, 10, 14. So if we take 27 minus 14, that gives us 13 losses now times 20. That's 260 pips in losses. And we still have our 600 in gains. So now instead of making 60 pips, we're making 340 pips. Does that make sense? Alright, gang. Have a great rest of your evening. I'll catch you tomorrow.